Welcome to Investor XP. This is the news show that covers investing for gamers. Our message? We want gamers to become investors and secure their future. We believe that gamers like yourselves have strong, intelligent communities that allow the cultivation of ideas, and that gives you a distinct edge in the stock market. This show, we discuss investment ideas focused around gaming, entertainment, and technology. I'm not a professional analyst, but I am retired under the age of 40 because of investing, and I want to help you build a better financial future. You can track my stock picks from the show on our website, investorxp.com. You can also see exactly what I'm investing in at kidbrokers.com. I'm building my kids' college fund with the very stocks we discuss on this show. Netflix and their movies, their little in-house movies that they make, they are doubling down on a deal with Adam Sandler for a new 4-film deal with him. A lot of articles out on this. It's very interesting to me that the analytics behind Netflix making this decision, they first signed him to a 4-year deal because they noted what people were watching. People who watch Netflix apparently love Adam Sandler. He had a lot of good movies. He had a lot of good hits. The Ridiculous Six, I watched that. Nothing to write home about. Certainly there's worse movies out there. I don't know what people kind of expected. It's a little bit like Dumb and Dumber 2. You got to kind of know going into it that it's not going to be it's not going to be The Godfather. But so people have kind of poo-pooed on his movies, but Netflix is looking at the numbers and what people are watching, and they're the most watched movies that they have. So it's great business for Netflix. Adam Sandler is happy with it apparently because he doesn't have to do all the press. So this is a perfect example of Netflix is kind of leading the way with their online content, and they're able to look so closely at what people watch. They make decisions like this to help grow their company, and Netflix is one where I did not invest in Netflix. I don't plan on investing in Netflix. It's too overblown for me, and I have been wrong for a long time on Netflix. Very long time on Netflix. They're up today a couple of percent. I mean, you look at their history, they have just skyrocketed. So they know what they're doing. My problem with Netflix has always been there's hundreds of times their earnings or what the stock price is, and you don't get anything for owning the stock. You don't get the dividend, and I like getting income from the stocks that I buy. So that's where I've stayed away from Netflix for that reason, and it's probably a poor call because look at how much they've gone up, and they just keep going up. And things like this deal with Adam Sandler just show they kind of know their business. They just look at the numbers, and that's what they're making their shows with. Our alternate strategy to Netflix has been WWE. For various reasons. One of them is the WWE Network, and they are kind of leading the way, one of the leaders in pioneering kind of their own online channel and the content that they have. They're also basically a monopoly on an old circus act that's been around for years and years and years. So they pay you 2.19%, and that should be green. That's a good thing. We want green, not red. But they pay you 2.9%. They are starting to get very pricey themselves. But a lot of momentum, a lot of growth behind them. They are up today for a couple of reasons. One of them is Citi is starting to watch them. Whenever you get a big name analyst jumping on board and watching stocks, you usually get a bump. But another article came out, and again, I didn't plan on talking about this today, but there's been a ton of articles dropping on stocks we own or stocks we're looking at. One of them here is WrestleMania is going to be available live in China for the first time on pay-per-view, I believe. PPTV Sports via pay-per-view. That is huge. WrestleMania is big business for them. It used to be the biggest pay-per-view, and now it's kind of one of the reasons why they sucker you into getting their network deal, their TV deal, their online service. Because you look at the price and you say, well, it's not that much more expensive than it would have been for me getting WrestleMania and the Royal Rumble, so I get them and more, and a whole library and original content. So if they keep doing what they're doing, and they learned from Netflix analyzing what people are watching and kind of push that, I see them continuing to grow. I like WWE as an alternate to Netflix, and WWE is one that we own. Netflix, it's just so damn expensive. We're still staying away from it, and I'm sure a year from now, when it's trading at 200 and something times, I'll be saying, I've missed the call on Netflix again, but it's just too rich for my blood. Thanks for watching, everyone. Thanks for watching the recap. For those of you who are watching the recaps, subscribe to our channel so that you get the latest in investing news for gamers. You can chat with us live during the show, providing that the stream stays up. We've had some issues with it today. Each day we're live 1:30 Eastern, 12:30 Central Time. We can pull up the chat during the show, chat with us, let us know what you think about some of the investment ideas. Send us a tweet at InvestorXP or shoot us an email. It's mail@investorxp.com. Give us a thumbs up if you enjoyed it. Subscribe if you haven't already. Thanks for watching, and we'll see you tomorrow.